The Labor Secretary saying, quote, "We're rolling back this overreach and making it clear that investment decisions should be made by fiduciaries, not by DC bureaucrats." So what are the implications for the retirement industry? Joining me now on this, we've got Tyrone Ross, who's the founder of 401 Financial. Great to have you here back in studio with us. So just want to get your reaction to what this could mean for crypto in retirement portfolios, to the extent that it's not already a part of some folks' retirement portfolios.
Yeah, so to that point, if you go back to 2022, there's been crypto available in specific employer-sponsored plans. So I think what we're going to see now is, now that it's loosening up, you're going to see more folks move in. Obviously, crypto and retirement accounts can get a little tricky.
Yeah.
But I think what they want is just leave it up to the employers, leave it up to the plan sponsors and the 338 advisors. If you're out there, update those risk disclosures.
With crypto in your retirement account, how do you safeguard it against some of the known volatility when it's a risk asset with the profile, like a cryptocurrency, Bitcoin?
Yeah, that's the thing. I think one, I would limit it, right? I think you start with Bitcoin, in my opinion, you end there. I think also you look at your, how long do you have until retirement? If you're 10 years or more, maybe you want to have a little bit more exposure. If you're retiring in the next year or so, don't think that Bitcoin is going to get you to close that gap that you have. And I think that's really what it is. And I tell people this, why do you want to invest in crypto? If you think that it's going to make you rich or you're going to close this funding gap that you have in retirement, that's probably a bad place to start.
It's really interesting. I tend to track this gauge on coinmarketcap.com, which is really just this fear and greed index here, to try and figure out, okay, where are we at extreme greed points, and what's almost to the tune of the Warren Buffett investment thesis and his thinking, when people are extremely greedy, that's when you should be fearful. When they're fearful, that's when you should be greedy. Where are we sitting at right now, even as we've gotten back above these 100K levels and been able to kind of sustain at these heights as of this juncture? So
I like that you mentioned the Fear and Greed Index. At my other company, Turnkey Labs, we use the Fear and Greed Index as a monitor of when there's really, a lot of buying and when they're selling. So when it gets in the 20s, it's usually a good time to buy because, again, the fear is immense. So I think what you're seeing now is retail is still slow to come back. I think what you're seeing is corporates buying. You're seeing a lot of the ETF flows still being strong. But I think if you're a crypto hippie, as you always hear me mention, like we are, and you're in the space 24/7, 365, the underlying fundamentals, the building, the infrastructure that's being built, it's hard not to be excited of what the future looks like. And I think you see that with us cracking all-time highs here last week. And I think we're poised to go higher. Where? No one knows. Right? We shouldn't pretend, but I think the industry is very robust from the ground up.
I've been getting takes on this throughout the week, and I would love to get your take as well. Why invest in crypto versus some of the alternatives of investing in a crypto touching or holding ETF or mutual fund versus investing in a company, an equity market company with crypto on its balance sheet? We're hearing that from DJT this week. We heard that from GameStop as well this week.
We're here, man, because I was thinking about this yesterday. It's a really interesting time in crypto because it's matured, right? Not all the way, right? Still a volatile teenager. You do have other options. You don't have to go right in and hold the underlying asset. You can own a Coinbase. You can hold a MicroStrategy. Circle just, announced their IPO to file. So you can own it indirectly, right? Through equities, which has PE ratios and all those things that folks care about. And you don't have to understand the underlying metrics and things. It can get a little fuzzy with crypto. So I think that's a good point. And I think that's what people are going to realize, is that they're going to own it anyway, right? Coinbase added, to, a bunch of indices now and part of portfolios. Folks are going to own it whether they want to or not. So I think that's a big deal.
Just bringing this full circle in our retirement accounts focus here, as you're looking at more younger investors and those who are in the workforce and contributing more aggressively to their retirement accounts, do you think that'll change the type of assets that get added into those retirement accounts, and that just paves even more of the way for Gen Zers, millennials who are already a little bit more crypto friendly?
Yes, because they want it, right? And I think studies have shown that folks would want access. There was a study done a couple years ago to show that 30+% of folks wanted access to crypto in a retirement account. And the oldest millennials now are in their 40s, right? So
don't remind me. Don't remind me.
So, they got a ways to go as well. But again, I think that's what's if you go back to what you said initially when you started this piece, is the DOL is basically saying, look, the old guidance is out. They didn't give new guidance. They're just saying we're stripping the old one away. So now they're putting it on the plan sponsors, the providers to say, all right, it's up to you guys. ERISA rules the roost here as always. Be a